Amazing. 113 days. The last 113 days from March 8th, year to date, there's been 30 all-time new highs. Think about that, 30 of them. During those 113 days, investors have been pouring in $1.7 billion every day. Purchase stocks, the same stock, the same semiconductor, that sell chips to the same cloud. We had, during that 113 day, the S&P was up 8%, Nvidia was up 67%. Now, no more is rate zero. That's right. Remember, we were told we have to have zero rate or this would not happen. But wait a minute. Let's go back to when interest rates changed to 5.4%. And that was in October 2022. If you think about it, the S&P's up 55%. Nvidia's up 1,134%. Wait a minute. We went to 5%, 5.4%. Let's take October, a year later, October 2023. Still over 5%, a whole year. Now, the S&P's up 30%, and Nvidia's up another 238%. 1 year later, interest rate's still 5.4%. No more zero. Now, there's so much hype with all this AI. At that same time period, investors, the CEOs rather, they did $338 billion in stock buybacks to push their own stocks back up even more. In fact, that $338 billion, did you know that's 30% more in stock buybacks than the previous year? I mean, we haven't seen this kind of stock buybacks. You have to go back to 2018 to see this. This is what's driving. This AI craze has targeted a handful of stocks. So you have Microsoft. They had $5 billion in stock buybacks. Now, that was the last quarter of 2023. Going right into the first quarter, Apple, $110 billion. Google, $70 billion. Meta, $50 billion. What are you, nuts? Adobe, $25 billion. Now remember, when you have Nvidia, Micron Technology, Taiwan Semi, and Intel, they're feeding these cloud, Amazon, Microsoft, Google, Oracle, Intel. This is where all the action is. That handful semis feeding these handful of clouds, and that's the stock market. And over the last 113 days, the market's gone nuts. Tech stocks. But remember, just a small group. Now, if you look behind, if you get behind the curtain and take what's going on back here, what do you see? Oh my God, breath tells a whole different story. But you don't hear about this, do you? No. So do 401ks. What do I mean? Well, you got above the 50-day moving average, 43 of the S&P 500 stocks. What are you, nuts? 43. That means we got only 43 stocks in an uptrend, but below downtrend, we got 457 stocks that are underneath the 50-day moving average. They're in a severe downtrend. That's less than 10% of the stock that are above 50-day moving average. Now, the last time it was this bad, it was just, and I remember, just a couple months before the dot-com crash of 1999 and 2000. I remember clearly. But we're being told not to worry about it. Don't worry. There's not going to be a crash ever because we have AI immunity. It's immune. No, it's not. Here's the proof why it's not and why at some point, remember now, we're going to stay with these stocks. I've told my members in my membership, my gang members, we're going to stay with these stocks. We're making a lot of money with these stocks. We're going to stay until the trend changes. And the beautiful thing about following trend and following the money, not fundamentals, following the money, is we're going to know in advance when there's going to be a rotation and where the money's going to go next. I believe it's going to go to the economy stock, financials, materials, and utilities. But let's go back to they're saying all these stocks are immune. Well, then wait a minute. If all these stocks are immune, or these group of stocks are immune, these AI craze stocks, then why is it that Salesforce, and I'll show you on my chart here, I mean, this is crazy, okay? These stocks have all collapsed. Here, take a look. Here's CRM, Salesforce. Look at this. I got 6 months up. Look at that. I thought everybody was immune. AI's immune. How about Workday? Look at that. That was a nice short position right there. Now, look at that. Nobody's talking about this, are they? No. And then you got Mugo. Now, what are these stocks? Wait, these were the darlings. This was it. These stocks were never going to come down again either, but they did. So the proof is when you have bad breath like this, and you have more stocks, 457 stocks, in a downtrend, not an uptrend, there's exposure. But again, that's okay. And our members, our membership, now we've been doing this for 25 years. We told them, yes, we're going to have the biggest crash ever. But right now, as long as they keep doing stock buybacks, as long as they're focusing on these semiconductors to feed the clouds, just stay with the trend. The trend is your friend. As I said, why did these stocks collapse? Well, because you got to remember, all this AI technology, they put a fortune. They paid a fortune for this technology. These companies, I just went through these 4 companies, paid a fortune. But the return on their investment is in a hole about 60, 70%. That's why they collapse. So we're being told they're too big to collapse. So rotation. Well, I think rotation in the future, and again, I told my members, let's stay with these stocks. Let's not fight the trend. And when the market opens in the morning, the first thing you do is you get rid of your opinion, lose that opinion so you don't lose your money. And always remember, the market always does what it's supposed to do, but never when it's supposed to do it. So always be prepared. That's why we put our stops in. That's why we watch volume. All the things that we can help you with. Investors like yourself. We've been doing this for 25 years. We can help. But we will have a rotation. We will rotate. It always happens. We're going to rotate into financials. We're going to rotate back into materials. We're going to rotate back into utilities. What are those? That's economy stocks. Those are the 3 biggest economy stocks. Why do you think, when you look at the Dow 30, and the Dow 30's been going down, the Dow 30's been going down. Why? Because they've been looking for rate cuts. They were promised 7 rate cuts. Then they were promised 6 rate cuts. And now they're down to 1 rate cut. That's why the Dow 30 tanked. Because if you take these economy stocks, the 3 most important economy stocks, they need rate cuts. Not happening. So that's why everybody's running right back to the same handful of stocks. And finally, proof that something's wrong. 401ks, Northwestern Mutual. They're right here in Sarasota, Florida, big company. They sell insurance, but they do a lot of planning for people. They're saying in this last report they did, nearly 70% people nearing retirement will not be able to retire. 401ks failed them. You have all those hidden fees. You can't short them. When they start going down, you're not allowed to make money as they crash. You got to just sit there and hope and hope and hope. And hope's a terrible thing when you're in the stock market. The last thing, look, you don't ever believe in the stock market. It doesn't work. When stocks are crashing, you're sitting there going, I just hope it's got to come back. It hasn't got to come back. You short. So when you got the major AI stock that I just gave you, force the rest of them collapse because the return on investment terrible. And when you got your 401ks, people can't retire. Now remember, the stock market's not the economy, and the economy's not the stock market. And when you're in the stock market, what do we do? What do my subscribers do? My members do? Follow trend. We follow the money. Because again, the economy has nothing to do with the stock market, nothing to do with the stock, other than earnings. Okay, if the economy's doing terrible, then earnings are going to come in terrible. But we don't make decisions on buying stocks based on what 401ks are doing. We don't make decisions on what stock to buy based on savings are getting crushed. We don't make a decision based on the fact people with credit cards are getting crushed. We follow the money. And for now, that's what we're doing with the big tech stocks. We're going to continue to follow it. Now, if you'd like to participate, and if you like the information I've given you, we can help you too. We've been helping people for 25 years. That's right, here at Phil's Gang. So just click the link in my bio. I hope you enjoyed this. I'll see you on the charts.